Because of why I search the deep through endless nights, no time to sleep. The call inside I can't deny. I'll find the light because of why.
Hey everyone, and welcome. So today we're going to tackle a real puzzle, Malta. You know, it's one of the smallest countries in the entire European Union, but man, it really punches way above its weight when it comes to money. So the big question is, how did this tiny island in the Mediterranean get so wealthy? Well, let's dive in and find out.
But here's where it gets weird, right? This is the mystery. A visitor to Malta said this, and honestly, it captures something a lot of people notice. When you're walking around, you might see cracked roads, messy cables just hanging out, things that don't exactly scream, "We're rolling in cash," do they?
And that right there is the paradox. The perception of these kind of shabby public spaces clashes hard with the economic reality. Malta's GDP per person is, get this, nearly 11% above the EU average. So, what gives? How can both of these things be true at the same time? Well, the answer lies in three really powerful forces that completely transformed Malta's economy. Okay, so the story of Malta's economic surge really kicks off with people. Specifically, a massive wave of foreign workers that came in and completely changed the game for the country's labor force.
And the timing here was absolutely everything. Back in 2004, when Malta joined the EU, its foreign workforce was tiny. We're talking less than 2%. But just a decade later, that number had exploded to over 10%. This influx was so crucial. It basically reversed a potential population decline and supplied all the workers needed for the boom that was coming.
And these workers weren't just filling one type of job. It was like the perfect mix, plugging these crucial gaps at both ends of the market. You had high-skilled professionals from right inside the EU taking on management and clerical roles, while at the same time, non-EU workers were powering essential sectors like construction.
And the impact of all this? Well, it was direct and it was huge. Between 2010 and 2014, this bigger workforce boosted Malta's potential economic growth by an extra 0.6 percentage points every single year. I mean, that is pure rocket fuel for your economic engine. So, you've got the people. The engine is ready. But what was it that attracted the businesses to actually come and hire them? Well, that brings us right to our second pillar, a famously attractive and incredibly business-friendly tax system.
Now, this is where things get really clever. See, on paper, Malta has a corporate tax rate of 35%, which sounds pretty high. But for foreign-owned companies, that is not the end of the story. Through this pretty slick refund system for shareholders, the effective tax rate, what they actually pay, can drop all the way down to as low as 5%. Yeah, 5%. It's a powerful incentive that has basically made the country a magnet for international business.
And the incentives don't even stop there. Think about all the taxes that are pretty common in other wealthy countries. A wealth tax? Malta doesn't have one. Inheritance tax? Nope. Gift tax? Annual property tax? None of them. It's basically a giant flashing sign to investors that just says, hey, bring your capital here. All right, so you've got this deep talent pool and a super low tax environment. What happens when you put those two together? Well, you create the perfect launchpad for our third pillar, a brand new wave of high-value digital industries.
And we're talking about sectors like online gaming, where Malta has become a global hub, as well as financial services and all sorts of other digital technologies. These are the kinds of industries that don't need huge factories. They just need skilled people and a stable, business-friendly base to operate from.
And the result of all this was a seismic shift in the economy. In just one decade, the service sector's share of gross value added, which is just a way of measuring its economic contribution, jumped from 70% to over 80%. This wasn't just a little bit of growth. This was a fundamental transformation of the entire economy. Okay, so now we have the full picture. A booming population, a powerful tax incentive, and a thriving digital economy. So this brings us right back to our original mystery. Why the disconnect? Why the gap between the country's obvious wealth and the state of its public spaces? Well, the answer starts to get a lot clearer when you look at not just income, but at wealth. Things like property and businesses. Research from the Central Bank of Malta shows that this kind of wealth is way more concentrated than what people earn each year. That higher Gini number for wealth, it basically just means that when it comes to assets, a smaller group of people holds a much larger slice of the pie.
And this statistical reality is really echoed in what you see culturally. This comment from someone living there kind of suggests a strong focus on private property, on personal assets, with maybe a little less emphasis placed on those shared public spaces. The wealth is there for sure, but it's channeled into what people own personally. And this contrast gets right to the heart of the Maltese paradox. The private wealth is super visible. You see it in the new cars, the modern stores, and one of Europe's highest rates of home ownership. But at the exact same time, the strain from all that rapid growth is just as visible, and the public infrastructure that simply hasn't been able to keep pace. So, let's wrap all this up. Malta's story isn't one of hidden poverty or anything like that. It's really a story of an incredibly fast and, frankly, very successful economic transformation. So ultimately, those shabby streets we started with, they aren't a contradiction of the country's wealth. They're actually a direct consequence of it. These are the growing pains of an economy that expanded so quickly, public infrastructure is still just racing to catch up with all that private prosperity.
And this leaves us with the big question for Malta's future, doesn't it? The economic model has clearly worked to generate a ton of wealth. The next challenge is finding the right balance. How do you continue to foster all that private growth while also investing more into the public spaces and services that everyone shares?
So what do you think? Is this a sustainable model, or does Malta need to shift its focus a bit? Let us know what you think in the comments below. Thanks so much for joining us to unravel this puzzle. And hey, if you enjoyed this explainer, a like and a subscribe would be amazing. We'll see you next time.